Hello, fellow compounders, welcome back. Known as the Oracle of Omaha, Warren Buffett's investment journey is nothing short of legendary. I believe he is the GOAT, the greatest investor of all time. He has compounded his wealth at around 20% per year for more than 60 years. He bought his first Berkshire Hathaway share in December of 1962 for $7.50, and that share is now worth $510,000. Behind this legend lies a methodical approach to wealth creation. Today, we are going to decode Warren Buffett. We will peel back the layers of Buffett's renowned investment framework. We will review the examples of others who tried to invest in his style. And we will build a Buffett-like investment framework for ourselves. So stick around if you'd like to invest like Warren Buffett.
This video is for educational purposes only and should not be considered financial advice. I am not your financial advisor, and you are responsible for your own financial decisions.
The stock market is a complex beast, but Buffett's approach is rooted in simplicity, discipline, and value investing. Let's unpack the genius of his framework. In Berkshire Hathaway's 1977 annual letter to shareholders, he sums up his investment approach in less than 30 words. We want the business to be one that we can understand, with favorable long-term prospects, operated by honest and competent people, and available at a very attractive price. This approach has remained the same over the years and is still in effect. Let's talk about the components. Circle of competence. Every investor has a domain they understand best. For Buffett, it's essential to stay within this realm. By investing in what he comprehends, or what he knows, he reduces unforeseen risk. That's why he looks for businesses that he can understand. Economic moat. Just as a moat protects a castle, a company must have a formidable barrier against competitors. This could be in the form of brand loyalty, patents, or a unique business model. That is what he refers to when he says he wants businesses with favorable long-term prospects. Leadership. Great companies are driven by great leaders. Buffett places immense value on a company's management, emphasizing both their competence and ethical standing. He looks for businesses operated by honest and competent people. Intrinsic value. Beyond market hype and noise lies a company's real worth. Buffett specializes in identifying stocks priced below their true value, or what we call intrinsic value, ensuring that he always has a margin of safety. This is what he means when he mentions that he's looking for businesses that are available for purchase at a very attractive price. Longevity. Buffett isn't in for a quick buck. He selects companies with vision, those poised for long-term growth and sustainability. He has said that if a business is not worth holding for a decade, it's not worth buying. Simplicity over complexity. The beauty of Buffett's strategy is its simplicity. He avoids businesses with convoluted structures or those he finds hard to understand, no matter how popular they might be in the market. By keeping to these core principles, Buffett invests in businesses he understands that have sustainable competitive advantages, are led by honest and capable people, and that he can buy at a reasonable price. He expects to hold his investments forever, or at least for a long time. Do you think you can invest like the great Warren Buffett? Let's review some investors that have tried. Warren Buffett is an emblem of investment wisdom, but he isn't the only star in the finance galaxy. Many have adopted his teachings and forged their own legacies. Let's journey through the tales of those who followed Buffett's trails to success. Our first stop, Markel Corporation. Under the helm of Tom Gaynor, it's become an epitome of value-driven success. A mirror to Warren Buffett, Gaynor's approach to value investing resonates deeply with Buffett's. Hunting undervalued assets and having an unwavering faith in their growth potential has been his hallmark. Moats matter. Taking a leaf out of Buffett's book, Tom Gaynor emphasizes on owning businesses with strong competitive edge, ensuring longevity and sustainability. Leadership and integrity. Gaynor isn't just about numbers. He seeks businesses led by visionary and ethical leaders, which is a principle deeply embedded in Buffett's philosophy. Diverse yet focused. Gaynor's portfolio, much like Buffett's, is a tapestry of diverse investments, each chosen with meticulous care and a vision for the long haul. Markel has three engines: an insurance company, a private equity arm that owns private businesses, and a portfolio of public businesses. This structure is very similar to Berkshire Hathaway. Oh, and by the way, Berkshire Hathaway owns shares of Markel Corporation. And the other way around, Markel owns shares of Berkshire Hathaway also. But the Buffett-inspired saga doesn't end with Tom Gaynor at Markel. The constellation of financial maestros who adapted and applied the Oracle of Omaha's principles to craft their success stories are many. There's Charlie Munger, Buffett's right hand at Berkshire Hathaway. He emphasizes on a lattice work of mental models, and he's always complemented Buffett's strategies. Monish Parai, an ardent Buffett disciple, stresses the importance of cloning successful investment strategies and tailoring them to one's unique context. Look up his book, The Dando Investor. And Guy Spears, another Buffett admirer, focuses on minimizing external influences when making investment decisions. I think he lives in Zurich, way outside of the Wall Street sphere. And he likes to mirror Buffett's independent thinking. These investors, inspired by Buffett, have carved their niches, proving that while the maestro's philosophy is foundational, success lies in personalizing and internalizing those principles. Are you inspired to walk the path paved by Buffett and emulated by many? Your journey is uniquely yours, but guidance from the greats can be your North Star. Warren Buffett's investment journey resonates with many, but what if you could craft a portfolio echoing his principles? To emulate Buffett, we must first become students of the market. Buffett's day often revolves around reading, from annual reports to financial news. Let's begin with the circle of competence. Begin with what you know. If you're a tech enthusiast, delve into tech stocks. If you're passionate about green energy, start there. Over time, as you learn, this is a circle that can grow wider. I personally am a techie. I also like reading Tom Clancy books. I love real estate investing, and I also enjoy eating out. I'm going to look at businesses in tech, defense, real estate, and the restaurant sector. Seeking value. Buffett's genius is in deciphering a company's worth versus its price. Equip yourself with tools and metrics to evaluate a company's true intrinsic value. Learn the concept of discounted cash flows and how to value a business. If this business is undervalued, that's your cue. I personally use a shortcut and look at the valuation calculated by Morningstar, Valuentum, and Stockbroker for each of the companies I'm thinking about buying. Steadiness over hype. In an age of tech unicorns, Buffett often leans towards stable, long-standing companies. They might not be trending, but their proven track records often make them gold mines. I'll stay away from hot companies when possible, and I'll use the ROIC as a screen. ROIC is the return on invested capital. Think of it as the return at which the business can invest its money. A consistent ROIC is a sign of a strong competitive advantage. Management integrity. It's not just about the numbers. Who is steering the ship is very important. Are they trustworthy? Buffett places a premium on ethical and competent leadership. So I think we should too. This is a bit hard to do. You need to research the companies with long histories. Read all annual reports and see if what management said was working on in the past actually became reality. Also, see how candid is the CEO in communicating bad news. Diversify, but not excessively. While it's good to diversify your investments, Buffett warns against excessive diversification. The key is to find a balance. Spread your risk, but invest in businesses you truly believe in. I'm going to run a focused portfolio of between 15 to 20 holdings. The long view. In a world chasing quick profits, adopt Buffett's long-term lens. Look beyond quarterly reports. Envision where a company could be in a decade or more. I'm going to follow Buffett and put a rule that I cannot sell any position in the first 10 years. Reinvest dividends. One of the secrets of Buffett's success is the power of compounding. When you earn dividends, consider reinvesting them. Over time, this snowballs into an exponential growth. Any dividends received will be reinvested until I retire. Using this framework, this is the portfolio I've come up with. Number 1, ticker LMT, Lockheed Martin. Number 2, ticker GOOGL, Alphabet. Number 3, DPZ, Domino's Pizza. Number 4, ticker BN, Brookfield Corporation. And number 5, MKL, Markel Group. I've reviewed all of these 5 in my lifetime portfolio videos. Here's the link. To wrap up, building a Buffett-style portfolio isn't about copying his every move. It's about adopting his philosophy, learning continuously, and applying those principles with patience and discipline. Are you ready to embark on your own investment journey, inspired by legendary Warren Buffett? Thanks for watching. Remember to always be compounding. See you in the next video. Take care.